Final account. Next question is trial balance of Sunlight Limited on 31st March 20. Debit and credit balances are given, and on credit side sales are given, so we have to prepare profit and loss account as well and balance sheet. I have marked all the adjustments, and star mark adjustments indicate they are independent. They are not concerned with any item from this trial balance. And general reserves, provision for tax is independent. Transfer to reserves is related to this particular item, and one effect will be in profit and loss. Proposed dividend is totally independent, and other adjustments are marked here with particular number. So in this question we will start with trial balance instead of adjustments. So we will start from debit side. Before starting, these are various notes to accounts. We will transfer all the items in notes to accounts first, and then total of these notes will be transferred to main format of balance sheet and P&L account. As we solve all other questions, this question will be solved in same format because it is useful and commonly accepted format. So we will start with debit side. First is fixed asset 8 lakh, adjustment number 3. It is tangible fixed assets 8 lakh, and third adjustment indicates that depreciation 38,000 should be provided. So less depreciation 38,000, and second effect for depreciation will be in note number 7, profit and loss account. Depreciation on fixed assets amount is 38,000. Okay, so first item is done. Next is purchase 4,20,000. Purchases are shown in cost of material consumed. Purchases amount is 4,20,000, and adjustment given is number 9. Purchases include furniture of 20,000 purchased on credit. So 20,000 should be deducted because it is purchase of asset. So now next 4 lakh will be net purchase, and this furniture is our fixed asset. So it will be shown in tangible furniture 20,000. So effect for adjustment number 9, furniture is shown separately as tangible fixed asset and it is deducted from purchases. But one more information is given. These are purchased on credit. So all purchases which are on credit are considered as creditors, but these are creditors for goods only, and this furniture is also purchased on credit. So we should allocate this at the time of showing in trade payables. Creditors for goods and creditors for fixed asset, that is furniture. Total creditors will be same 54,000, but 20,000 will be for furniture and 34,000 balance amount will be for goods. म्हणजे एकूण आपले 54,000 द्यायचे आहेत, पण त्यापैकी ॲसेटचे आपण वेगळे दाखवलेत आणि गुड्सचे वेगळे दाखवलेत. हा हिडन ॲडजस्टमेंटचा पार्ट होता जो मार्कांसाठी असतो, पण आपण बऱ्याच वेळेला करायचं विसरून जातो. त्यामुळे ॲडजस्टमेंट पूर्ण वाचून त्याप्रमाणे आपल्याला इथे इफेक्ट घ्यायचा आहे. सो परचेसेस आणि क्रेडिटर्स कंप्लीट झालेत. नेक्स्ट इज एम्प्लॉय बेनिफिट एक्सपेन्सेस विथ ॲडजस्टमेंट नंबर 4. इन एम्प्लॉय बेनिफिट एक्सपेन्सेस amount is 1,08,000. Name is given instead of salary as employee benefit expenses only. Amount is 1,08,000, and adjustment number 4, outstanding expenses are 16,000. So add outstanding 16,000. This outstanding will be shown as other current liability. Outstanding employee benefit expense amount is 16,000. Okay, done. Next is finance cost. Finance cost has separate note. Finance cost is 21,000. Then other expenses 17,000. Next, opening stock of finished goods is 1,02,000. It is shown in change in inventories. Opening stock of finished goods amount is 1,02,000. Next one, debtors with adjustment number 2. Debtors are trade receivables. They will be shown here. Debtors 1,54,000. And adjustment number 2 is sales of 14,000 were not recorded in the books. So these are unrecorded sales. So automatically our debtors will increase. So add unrecorded sales to the extent of 14,000. And this will also affect our sales amount. So immediately we will also take sales. Sales given are 7,50,000 and add unrecorded amount is 14,000. So effect for unrecorded sales is add to debtors and add to sales. Next is long-term investment 1,50,000. It is shown as non-current investment. This non-current indicates more than 1 year. As it is mentioned long term, this hint is given so that we should transfer this amount in non-current investment. Amount is 1,50,000. Okay, next one is advance tax 50,000. Advance tax is shown as short-term loans and advances. Advance tax 50,000. Next is cash in hand. It is shown as cash and cash equivalents. Amount is 47,000. And next one is short-term investment. The short-term indicates less than 1 year. So it is shown as current investments. Amount is 48,000. So this way our debit side is complete with all adjustments concerned with debit side items. Credit side, first item is equity capital 5 lakh. It is shown in first one. Information which must be written is authorized capital. Equity capital is 5 lakh, but in adjustment there is no information given about authorized capital. So we will write here dash because it is not mentioned. Okay, you can also call it as NA, not available, or you can write question mark. And this is issued and paid up capital, which is given in trial balance 5 lakh. While taking total and balance sheet transfer, only trial balance amount is considered. Whatever amount may be written in authorized capital, it will not be considered for taking total. Next is 10% preference capital. It is also given 2 lakh. Okay, next one is general reserves 1,70,000. $1,70,000 and adjustment given number 7 is transfer to general reserves 25,000. Add transfer 25,000. So total will be 1,95,000. Now this transfer has effect in appropriation of profit, that is adjustment of current year profit. Normally it is shown in this note only, but for understanding purpose I will not stretch this note. We will write this as working note here separately. Appropriation of the profit. It consists of P&L account opening balance, then add profit for the year, and now less any appropriation from this transfer to general reserves. This amount was 25,000. So this amount will be deducted from these two amounts. So effect of transfer to general reserves is deduct from appropriation, that is profit and loss account closing balance, and add to general reserves. Okay, next item is unclaimed dividend 10,000. It is our other current liability. Unclaimed dividend, this is dividend for any previous year which is not paid or which is not claimed by any shareholder. Next, creditors are done, sales are done, interest on investment 13,000. It is our income, so shown as other income. Interest on investment amount is 13,000. And adjustment number 5, interest accrued and due 3,500. Add accrued and due, so it will be received shortly. 3,500 is our outstanding income. Normally outstanding expenses are shown as current liability. This is outstanding income, so it will be shown as our other current asset. Interest accrued and due on investment will be 3,500. This item is done. Surplus 1419. Surplus, that is profit and loss account opening balance 88,000. This will be shown in appropriation, opening balance of last year P&L account. Then depreciation provision opening balance is shown 1,22,000. This provision will be deducted from tangible assets less depreciation provision. Amount is 1,22,000. So when this provision is given as lump sum amount, it will be deducted after writing all other assets. And if it is given with particular name, then only it will be deducted from particular asset. म्हणजे ही जर का प्रोव्हिजन वेगवेगळ्या असेटच्या नावाने दिलेली असेल तर तिथे प्रत्येक असेटच्या नावामधून लेस केलेली दाखवायची. आता लमसम दिलेली होती म्हणून आपण डायरेक्टली लमसम सगळ्या असेट मधून लेस केली. पर्टिक्युलर कोणत्या असेट मध्ये ही लेस करणं आता शक्य नव्हतं. दुसऱ्या एखाद्या क्वेश्चन मध्ये तुम्हाला ही पर्टिक्युलर नावाने दिलेली सापडेल, त्यावेळेला त्या असेट मधून ही लेस करायची. Last item is advance from customer 10,000. Advance from customer is our other current liability. Sorry, it is our advance from customer is our short-term borrowing. It is our liability but under this name, short-term borrowing. So this way our trial balance is complete. Let us have adjustments which are pending independent. Stock of finished goods is 1,20,000. Market value is 129. So this will not be considered. Whichever is less, that is 120, will be shown as inventories. Stock of finished goods 1,20,000, and same will be shown as change in inventories less closing stock of finished goods 1,20,000. It will be deducted from opening balance. Okay, so first adjustment, two effects are done. Second, third, fourth, fifth. Sixth adjustment is still pending. Provision for tax for current year is 30,000. Provision for tax is shown as short-term provision for current year tax. Provision for tax amount is 30,000, and this amount is also transferred to profit and loss account format as current tax. It is 30,000 which will be deducted from profit before tax. Okay, so it is written here. First effect is in profit and loss account format, and second effect is short-term provision. So all other adjustments are already transferred. Now our next part will be taking total of all these notes to accounts, and we will transfer all these balances in profit and loss account format and then in balance sheet format. Okay, so let's take total of all notes to accounts and then we will transfer them into P&L account and balance sheet format except this particular note. Okay, so after we take total of all notes one by one, let us transfer here authorized capital and issued paid up 7 lakh transferred as note number 1. Note number 2 is pending. We will transfer this at the end before taking final total. Note number 3, 4, 5 blank. Note number 6 10,000 transferred. Note number 7 is 54,000 shown here. Note number 8 is 26,000. Okay, note number 9 is 30,000. Note number 10 6 lakh 60,000 tangible assets. Intangible asset 11 number blank. Note number 12 is 1 lakh 50,000. 13 and 14 are blank. Note number 15 is 48,000. It is transferred here. Note number 16 is inventories 1 lakh 20,000. It is shown here. Note number 17 trade receivables are 1 lakh 68,000. It is shown separately. Then note number 18 47,000. Note number 19 50,000 and note number 20 is 3,500. So this way all notes up to 20 number related to balance sheet are closed and they are transferred except reserves and surplus note. Next is profit and loss account format. In profit and loss account format, note number 1 is 7,64,000. It is our income revenue from operations. Next is note number 2 16,500. Total of income items is 7,80,500. Then expenses, first is material consumed 4 lakh. Then changes in inventories is 18,000 but it is negative. So it is shown here as minus 18,000. Next is employee benefit expenses 1,24,000. Finance cost 21,000. Depreciation and amortization 38,000 and other expenses 17,000. So after we transfer all these expenses, we have to take total of expenses which is 5,82,000. Income minus expenses equal to 1,98,500. After this, exceptional items, extraordinary items are to be deducted which are not here. So our profit before tax will be 1,98,500. Tax which was already shown as per adjustment was 30,000. It should be deducted as provision for tax. Amount will be 1,68,500 profit after tax. Then after making adjustments for discontinuing operations, our current year profit finally will be 168,500. This profit will be transferred to our appropriation working note which was pending. So in this, add opening balance plus profit and loss closing balance and less transfer to reserves 25,000. We will get 2,31,500 as profit and loss account closing balance. This closing balance will be transferred to note number 2. Note number 2 is reserves and surplus. So here we will transfer profit and loss account closing balance. This closing balance amount was 231,500 and after we transfer this, then we will take total of note number 2. It is 426,500. Only 2 reserves are there. Total is 426,500. So instead of showing this appropriation here, you can also show this in note number 2 itself. Whatever is suitable for you, you can use it. I have shown this working separately, but it is not compulsory to show it separate. You can show this in reserves and surplus. Final balance is 426,500. This balance we will transfer to balance sheet as note number 2. This will be last step in closing the notes to accounts, and then we will take total of liabilities and assets. After you take total, it is 12,46,500 tally amount of balance sheet. All these items are written in current year column only. Previous year column is always kept blank, and this is date 31st March 2019. You can see this video is recorded only for DBJ college students and no one else. So do not misuse this video. It is only for educational purpose. Thank you.